Hey everyone, how's it going? It's Friday after the close. Go over a few things with you. Let me get on the right page here. So on Monday or Tuesday, whatever it was, I put up this 98% probability because it started to look like the options market. You had the 400s up here that were the highest open interest. Well, technically they still are, but this was a lot lower. And so Apple was kind of just hanging out in this range, and it looked like, at least because the options market has been breaking through this stuff, so that's why I've kept all these probabilities off. And I didn't want to put on the this 80. This is normally 83% probability, and it's on these highest open interest. And so I didn't feel comfortable putting those on, but with the 98% coming over here, one strike off each side, felt fine with because Apple's right about that 390. And it looked like it was holding all week until, well, shoot, even up until last night, and then you know, just the market just melted down. So anytime you have high volatility, high volume, a news event, any major market event like we just went through, nothing's strong enough to hold a stock up, hold Apple up, or keep it down. Any of that stuff kind of all goes out the window. So I didn't see that one coming. So really not much more to say on it for now until the market settles down. On the monthly, I don't have these up either and never put them up. But until the market calms down, just use these like I've been saying for your kind of buy and sell points, and that's really about it on these. So overall, I thought the market in the beginning looked a lot calmer than it ended up being. And so going with that, here's a chart of Apple on the top, and here's a chart of the spider. And so this is kind of just my general thoughts. It doesn't have anything to do with the open interest strike stuff. So in the market was calm, or Apple was holding up really well when the market was selling off. It wasn't selling off super violently, but the thing the VIX was at like 23-25% of the time. And so Apple was you have it 395, 390, and so it was holding up great. And then even on Thursday, on that big down day, even in the middle of the day, 385, so it's $15 off its all-time high. That's not a big deal. So it's holding up great while the market was coming down, a pretty good amount for all week. And so my thinking was, in 2008, you had, and so all this was caused by, it's good to know why stocks or the market and everything is selling off, like when they're just selling, liquidating everything. So all that was happening here was margin calls started to come in, redemptions with funds. Anyways, they just need to liquidate and force sell. So once you know something's a forced sell and there's nothing actually wrong with it, you're gonna want to buy. It doesn't matter if you picked it here, if you picked it here, here, it doesn't matter. Once you know why it's being sold off, you can buy into that fear because it's not a real reason. It's being sold off. It's being sold off because of force, not by someone's will. And so once you know that, you can kind of sit there calmly and pluck away at it, or just sit there and go play golf for the day. So what I was kind of waiting for, in 2008, Apple was the first to go because people had so big gains in it. It was big, liquid, all that stuff. So they sold that thing off first in the face of record earnings and all that stuff, into the same type of deal where it was forced liquidations. They just had to get into cash. And so that ended up being a huge mistake, all those people that liquidated Apple first. And so this time around, you knew it was going to be, especially because you saw the market kind of starting to sell off, a little bit, starting to correct. And then Apple was just holding strong. That's not normal. They basically weren't selling Apple at all. And so they were holding Apple in their back pocket. Like, this is going to be the last thing that I ever have to sell, along with gold. And so it sold off a little bit, but still $15 off the all-time high, not a big deal. And then finally, I, in my thinking, knew the market is close to a bottom. Once I was, because it started to get, pretty aggressive selling here and then even here. And then I was like, well, once Apple breaks, the selling is going to be about done. Same thing with gold. We'll just stick to Apple with this. And so once that starts to selling, you know the market's close to a bottom because that's the last thing that they have to liquidate. You know, I'm out of collateral. I have nothing else to sell. So it started to sell off here pretty good. And then again today, just mass exodus from it. And then something always bottoms the market. In this case, it was the ECB news, but you always have something that bottoms it. Once all those sellers were just completely, didn't need to raise any more capital. We'll go back to that. The selling is pretty much done. The market is gonna bottom. You also had the non-farm payroll today, and that's a lot of times it marks a market turn. Also, selling off that news, and then or just the market in general, and then rebounds. You have a bunch of things why I think the market bottomed, pretty much today is you cannot all week you've had 20 million shares, 25 million shares, 30 million shares, and now 43 million in Apple. You can't have that many. You run out of sellers eventually. You just cannot keep up that volume. That's why I always say I go against when people love to see volume on an up day, like, oh cool, Apple had 43 million shares and it was up 2% today. That's horrible because you're on the same thing on the upside. You're gonna run out of buyers one day. You can't keep up that volume. There's just not that many people out there in shares. So same thing when it goes to the downside. When you have heavy volume day after day after day, it's gonna run out. And I think that was your exhaustion today. You also had on the CME, you had record E-minis trading today, volume on options. You had record volumes trading today, just all over the place. You had record volumes trading. So I think they're going to get a deal done over the weekend or something to calm the markets. So I pretty much, I'd say that this is your bottom, all those things. Two real quick, I know I'm going fast over the stuff. Here's a spider, and this is the August monthlies. You can't really, it doesn't work as well just because it's so heavily traded and people use it for hedges all the time. There's a lot more elaborate things going on than with Apple. With that said, though, you have 4 or 5.5 million contracts of puts over here, and you have 500,000 of the 130 strike puts, and so the S&P is trading down here right now. Well, between now, these are gonna have to close up eventually between now and August 19th when they expire. And so that's going to create, because whoever short these is going to be hedged and they're going to have to buy the spiders back up. And so any little spark, if you don't think it's the bottom or you think it's just going to stay down here, one of these days, and maybe it is just on August 19th, but these are going to have to close up. And so that's going to create a spark of buying, mix that with a short covering rally or anything, and it's just kind of a little bit extra juice, we'll say. So I just kind of wanted to point that out. That's a lot of contracts that need to close up, and more than likely they'll all get closed up at the same time to create that little buying. And all it takes is one little spark to ignite, the whole market, because it just trades, so lock and step with each other like a herd. Okay, I'm running out of time. I'm not going to go into next week because right now there's way too much volatility to say as far as using what strikes and that stuff. So maybe I'll get a video out or do something for Monday or Tuesday. All right, have a good one.